You're probably aware of how volatile the market has been so far this year. You're also probably hearing a lot about trade wars between the United States and China and how those trade wars are behind the recent market volatility. I want to take a few minutes right now and explain what a trade war is, what's going on, and how this might impact you as an investor. Now, I've got to tell you that I scoured the internet for information on this dispute, and I was actually very disappointed. I'll tell you why. It was very difficult to get objective, non-biased information. People who don't like President Trump see this topic one way, and people who like President Trump report on this entirely differently. And that's really bad news for you and me, because skewing something this important can lead to making the wrong decisions. So what I'm going to try to do is correct that for you right here. And I'm going to break this video up into one or two different, or maybe even three different parts. First, what is a trade war? A trade war starts when one country imposes tariffs, which are special taxes and/or quotas on the imports from another country. This, of course, makes those products more expensive. So what consumers do is they would tend to buy the domestic product instead, because they're cheaper. Now, the country does this, among other reasons, to protect the domestic producers from cheaper imports overseas. So this helps those domestic producers, but it hurts the other domestic companies that buy the product and use it, and it also hurts the consumers because they have to pay higher prices for those products. Now, this war escalates when the other country retaliates with similar trade barriers. Now, that can start a spiral of escalation which leads to higher and higher tariffs, which result in higher costs and lower demand, lower production, less work for people, and potentially an economic slowdown or disaster for both sides, or maybe the entire globe. Question, are we in a trade war right now, and with whom? Well, it depends on who you ask, but let's look at some facts. On March 23rd, the United States imposed 25% tariff on Chinese steel and 10% tariff on Chinese aluminum. Now, China responded by imposing $3 billion in tariffs on American products. Then the United States threatened to place tariffs on $50 billion of Chinese products. And of course, the Chinese responded in kind. And then the United States started talking about, well, maybe we'll put another $100 billion of tariffs on Chinese products. Now, keep in mind that the United States imports $500 billion in products from China, while the Chinese import about $130 billion from the United States. That means, theoretically, we can impose a lot more tariffs on their goods than they can on us. Now, just keep that in mind. It'll make sense later on. But there's no question this latest threat of imposing up to $150 billion in tariffs on China could take months to implement, because it takes time to review exactly which products to impose these tariffs on and how much. So, depending on how you look at things, we aren't really in a full-scale trade war right now at this time, but there have been some skirmishes, and a full-on trade war with China remains a possibility. Now let's continue and look at this a little deeper. How will the trade war impact the United States and China? Well, because the United States is a service-based economy, the impact of the tariffs that China is threatening, they probably won't increase prices all that much for American consumers. And they also may not hurt American producers all that much for a variety of reasons, which we'll come back to. Now, for example, Commerce Secretary Wilbur Ross said on Friday morning that the price of a can of Campbell's soup would go up about 0.6 of 1 cent. Now, of course, Secretary Ross has a horse in the race, but for now, let's take him at his word. Objectively, China has a lot more to lose than the United States from a monetary standpoint. We import, as I said, $500 billion from them, and we could, in theory, impose tariffs on all those Chinese products. The Chinese can only impose tariffs to the extent that they import products from the United States, and that's about, as I said, $130 billion. Of course, if we did impose those tariffs on all Chinese goods that we import, which I really don't think is very likely, but it would make those goods more expensive for consumers and producers in the United States, as I explained above, and it would make our goods more expensive for Chinese consumers. Now, the Chinese have already imposed tariffs on luxury goods like bourbon and pistachios and almonds. But that doesn't impact most of the population. They're luxury items. As I said, they're now threatening to put tariffs on soybeans and other staples that will have a bigger impact on everyday Chinese people. Now, the Chinese people have got to eat. And this makes it a little bit more tricky for the Chinese government to implement those higher tariffs. They might impose tariffs on soybeans and meat products, but if they do, they'll probably just buy those goods from some place like Vietnam after we sell it to them, because there's only so much soybean and meat products in the world. Now, we could argue about which country would sustain greater losses and which country's population would accept those higher costs and for how long. But you know what? That's just opinion. It's impossible to know. But there are several possibilities. Not all of those possibilities are terrible for the United States, but not all of them are good for the United States either. As I said, this could spiral and get out of control. But we have to continue to monitor the situation. We just don't know yet. Let's go on and talk about why is the United States imposing tariffs. The United States position is that the tariffs on steel and aluminum are being done to protect the steel and aluminum industry in the United States. President Trump argues that having such industries are vital national interests. So he wants to protect them. But here's the thing. It's important to note that he gave other countries like Canada, Mexico, and Australia that sell us steel and aluminum temporary waivers from these tariffs, even though we import steel and aluminum from them. So it bears looking at it a little more carefully. Now, the second round of tariffs, the $50 billion, that's being imposed apparently to counter what President Trump says, and many other people say, are unfair business practices and Chinese theft of intellectual property. This issue of intellectual property theft is huge. Estimates are that this Chinese practice costs the United States over $600 billion a year. Now, there have been years of discussion between the United States and the Chinese government on this topic, and so far the problem has only gotten worse. So some pundits say that this entire conflict could be averted if the Chinese just live up to their promises that they've already made. Now, the third reason for these tariffs is the United States wants to access the Chinese markets. For years, domestic manufacturers here in the United States have complained that it's very difficult to enter the Chinese market because the Chinese government restricts it. Often, American companies are forced to share technology and secrets with the Chinese just in order to gain that access to their market. And the United States feels that that really is no longer acceptable. So this issue has also been around for years, and other administrations have used the World Trade Organization to try to settle this problem. But that has not proven effective either. Right now, the Chinese sell about $350 billion more in the United States than we sell in China. And President Trump says that this whole conflict would go away if that was cut down to $250 billion. So what are the odds that this will be resolved? Well, if I was a betting man, I'd say pretty good. both sides would only lose from an expanded trade conflict, and this seems like they're playing chicken a little bit. This could mostly fizzle out. Both the US and the Chinese tariffs are still only in the proposal stage. In fact, Trump economic advisor Larry Kudlow told reporters on Friday that nothing's happened. Nothing's been executed yet. The bottom line, well, things could get a lot worse, but I think the odds are that this will be resolved. This is not to say that the market will immediately improve. It might, but it might not. In fact, it could get worse. As I've said before, right now the market is very, very sensitive to bad news. And I believe that this sensitivity is what's driving the market volatility right now. Over the weekend, there were chemical weapons attacks used in Syria. And then on Monday morning, there was a strike against the Syrian military, right now by unclaimed sources. Now, as I film this, the markets haven't opened yet. But my guess is that this Syrian problem will steal the attention of the media away from the conflict with China. The media will simply move on. I don't know for how long. Now, this trade war situation is fluid, but so is the news cycle, and it will take months for this trade conflict to work out and to get clarity on it. By then, the news will be focused on some other exciting / scary issue, probably. Maybe not, but probably. This and other issues do impact our economy, and they impact the markets. And as investors, we have to monitor the situation. But we have to manage our investments based on facts and numbers. The news media is a distraction and should be ignored. At least that's my opinion. The best course of action is to continue to monitor the situation and make numbers-based decisions, which are objective and rational. And that's what I'm going to continue doing. If you have any questions, give me a call, let me know. Have a great week. Thank you.